Your company has never filed an FLA. Now what? This is one of the most common and most overlooked FEMA compliance gaps we see at FEMA by advisors. In the next few minutes, we will explain what the FLA return is, why non-filing is a problem, and exactly what you should do next. What is the FLA return? FLA stands for Foreign Liabilities and Assets Annual Return. It is a mandatory filing under FEMA. Every year, Indian companies that have received foreign direct investment or have made overseas direct investment must report their foreign liabilities and assets as on 31st March. The due date is 15 July. Filing is done online through RBI's firms portal. The purpose is simple. It helps the Reserve Bank track India's external liabilities and assets at the company level. Does your company need to file? You need to file FLA if any of these apply. Your company has received FDI from foreign investors. Your company has made overseas direct investment. You are a subsidiary or joint venture of a foreign company. You have outstanding foreign liabilities or assets as on 31st March. Even if the investment is small or the overseas entity is dormant, the filing obligation still exists. What happens if you have never filed? Non-filing is a FEMA contravention. Each year of non-filing is treated as a separate violation. RBI or the Enforcement Directorate can initiate action. Penalties under Section 13 of FEMA can go up to 3 times the amount involved. It also creates serious problems during funding rounds, bank audits, and due diligence. Future FDI, ODI, or ECB transactions can get delayed. And when multiple years are pending, compounding becomes more complex. Now what? Immediate steps. If your company has never filed FLA, here is what you should do. First, assess the possession, identify from which year the foreign investment started, and list all pending years. Second, gather the documents, financials, shareholding details, FDI or ODI records, and related filings. Third, file the pending FLA returns on the RBI firms portal. Fourth, evaluate whether compounding is required to regularize the past delay. Fifth, put a proper compliance calendar in place so this never happens again. Regularization through compounding. When FLA has never been missed for several years, simply filing the current return is not enough. Compounding under Section 15 of FEMA is the cleanest way to close the past contraventions. You admit the delay, pay the compounding amount, and the matter is generally closed. RBI aims to dispose of compounding applications within 180 days of receiving a complete application. Proper documentation and a clear explanation of the years of non-filing are essential. Common mistakes. Companies often make these mistakes. Assuming small FDI is exempt, filing only for the current year and ignoring the past, ignoring dormant overseas entities, relying only on the statutory auditor, waiting until a funding round or bank query surfaces the gap, trying to handle it through self-research without expert guidance. All of these increase risk. How FEMA by Advisors helps. At FEMA by Advisors, we help companies that have never filed FLA by assessing the full gap and exposure, preparing documents for all pending years, supporting filing on the firm's portal, handling the compounding application with RBI, coordinating with your AD bank, setting up ongoing annual compliance so the problem does not return. Key takeaways. Remember these points. Never filing FLA is a continuous contravention. Starting from this year does not erase past non-compliance. Compounding is the cleanest regularization route. Funding rounds and audits now routinely check FLA history. Early expert advice is always cheaper than delayed action. If your company has never filed an FLA, the right time to fix it is now, before the next funding round, bank audit, or regulatory notice. FEMA by Advisors is a specialist FEMA consultancy based in Hyderabad. Visit us at www.femabyte.com or call 9933 8556. We can help you regularize the past and stay compliant for the future.